Hi everyone, today is Monday, May the 5th, 2025. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. We do have notice that we've got the largest sequence of upside days in over 20 years. Take a look at the monthly candlestick formation. It is the one that I want to stare down right now. Although we've got inflows from retail, my thought is that this is still a short covering rally. Now, that being said, if we get up over 57.73, we'll expand into the downward candlestick formation of April. My suspicion is, of course, that we stay generally sideways, but let's have a look at the market space. Looking at the E-mini S&P 500, we had a pretty wide opening range, really wide opening range, actually. It looks like about 25 points. We hit, in pre-market, we hit the entire day's expected move already. So what does that suggest? Well, it suggests we might have ourselves some chop, but if we lose this implied volatility move target of 56.54 on the day, we will rotate into a prior 1 hour chart open. That's the Globex. That's what these yellow lines are, a prior 1 hour high or low of an opening range. That's 56.44. It meshes with support down here at around 56.42. And then the 2-day implied volatility move is 56.32, though I think if we get down here, we could easily expand down into the 28/27 area. What is trend? 14, simple moving average, down, 50, up. That's a cross current of motion. Deeper dips are going to find buyers. And we are here in a space that says oversold pre-market, but that just means they're trying to find support. Okay? Very, very important to notice. On the upside, if we can get back into the opening range and indeed above 56.80, we will try to track through into 56.95 and then 57.06. And if we run any more, 57.24. We do have the Fed meeting starting this week and the FOMC release on Wednesday about rates. So I expect a fair bit of chop today. Fair bit of chop. So I'll be waiting for a fade here. I did not get this short at the break of the opening range low below it. So I'll either be looking for a bounce back up into 56.80 that fails and take the short there, or watching for a stabilizing motion here at this prior market structure breakout event, and that is right there at the implied vol move. If I lose it and recapture it, I suspect it's a long to recover. Let's go to the NQ. Let's take a look at the monthly candlestick formation. Closed bullish. That's a really big move. It's tested the high of this area and now looking at April's candlestick to try to recover. That's what the buyers are trying to do. In terms of the hourly formations, we are still making higher lows. We're breaking the trend a little bit by price. And so my thought is we have a downward pressure event past this first implied volatility move at 19,977. That would be the first target. If you took the short at the failure of the opening range down up here at about 20,110, or you took it at 20,075, it's been a nice short. This would be an area to take part of your profits and then watch to see if it walks down into the next target below at 19,915 to 19,864, which is the implied volatility move of 2 days. If it loses that level, my thought is that we get back to that 19,800 area. in some kind of aggressive move. I do believe that this is a short selling rally that we've been in, and so reversion to these congested zones is my thought. How would I like to get in? You know, I've got negative momentum. I'm underneath the 14. My 50 is up to flat, and so I would need to watch for recovery of these targets to go long and to go short. I'd like to see a failed move. Could we say, hey, this long is potentially going to set up here? Yes, we absolutely could. However, I prefer to let this candlestick close and then see if the price action recovers above that 20,000 zone. Very, very disconcerting in terms of overall price. It is certainly mixed. It is a mixed bag. For the YM, you know, these are done monthly. The moves up are still very, very wide. This looks like a great place to sell premium in my mind on a longer term. But as we sit, we've got higher lows, and now we're trying to create a range here in the YM, and that is, of course, the E-mini Dow. Can we hold, look at all the market structure events right here. Can we hold 41,114? Potentially, yes, but I would wait for price action to break through this congested area, pull back and give me a higher low before I moved forward with the target of 41,300 and then 41,421. This is very sideways, doesn't have a ton of edge from a big picture event. Same sort of motion in terms of the monthly, very big wick coming back to almost the 50 on the month. As long as we hold this 40,689, we should be in pretty good shape, right? That's certainly my supposition. Let's see what color this line ends up being. You never know. So I'll make that our general green one, and we know that that's a number to watch there for a pullback that holds frontline support. If we lose it, we're going to have another retrace. Let's get to micro Bitcoin. Taking a look at this chart, it's done just about the same thing. It is fading, however. Here's what we have. We have a high that's sort of a blow-off top. Stan Weinstein might say this is a failed area, right? So he would potentially short at the top of this range. What did we do? Came right into the market structure breakout area. Old resistance, new support, went all the way back up. Here's the thing about Bitcoin. It really needs to hold this region around 94,000, right? That's supremely important. Let's get to the 1 hour chart. We can see all the heavy congestion. We know when a lot of lines show up, it means that price action is congested. Huge opening range. The opening range is, $1,300 wide, which incidentally is higher than the implied volatility move for 1 day. And so now here is the IV for 2 days, and we are breaking that down. So could it be a bottoming formation that allows us to come down and test 93,790? I think that is a likelihood, most certainly. What's the trade? Well, you can see buyers trying to hold the floor. If we hold this area at 94,312, we have to get up over 94,600 or so to get back up into the low of the opening formation and the implied volatility move for the 1 day event. We have noticed that Bitcoin is expanding out of its implied volatility moves on the day, so that leaves us with some measure of caution. My suspicion is that we try to find a floor somewhere here below in the near term and then bounce. And so the floor action, 93,790 to 93,650. Momentum is up, but it's in a downward trend. So it tells us that all the traders are doing is trying to find resistance And so this is a bounce area that should be a short in the near term. Let's take a look at oil. OPEC increased its output, and that gave us a really savage dip. Wow, I got the wrong opening range here. Let's do that again. Massive move, but interestingly, still not the range. They've built a ton of premium into the implied moves today for oil. It broke the one-day implied volatility move on the opening candlestick. That number is 55.58. It immediately recovered and tried a base at 55.94. That's going to be the new floor this morning for trades as long as price action does not expand below this area. That's going to be the floor. So where are we going? Momentum is up. Trend is down on both the moving averages. And so this tells us we are looking for resistance. That resistance zone looks to me like 57.86 to 58.09. I'd be looking for the failure of those areas to trade the short, but the news is driving the motion. And so we need to be really careful if we're going after a short here. It could be that we go all the way back up to 58.42, which is the high of the opening range of April 30th. And then the implied volatility move to the upside is 58.96. And so that tells me we could go from one end of the implied move, which we did, all the way to the other side because of the news event. Nevertheless, bounces that get all the way up here are going to have wicking action that will bring price action lower. My suspicion is that we pull back and try to hold the high of the opening range. If we lose it, wait for it to recover above it before you take a long, because this is a very downward trending market for oil. Let's go to gold. Whoops, wrong instrument. All right, so this one is incredibly interesting. I'm not sure what's going on with gold this morning. I suspect because of all the shenanigans we've got in the FX market in the overnight, we've got some massive volatility moves in currencies in the overnight. And so what I see this doing, look, it came right into resistance. It's well over the 3-day implied move. Let's see what the 4-day implied move is, or the week, actually. Let's go to Friday. That's $91. Is that right? Hang on. No, $83 to the end of the trading day. All right, so $83, that's $33.30. What? 33. Yeah, 33.30. That's right up here where I drew this line. Very interesting. Okay, so I'm going to clone this. 33.30 is the move, and I'm going to say that is a 5-day. That's a 5-day vol. It's actually also the weekly formation. So here we are coming right up into the edge. I think this is a topping formation, so I would love to see this price action fade. Looking for a short here at $3,324 would be, pretty nice. Well far away from the opening ranges for the trade setup. So we have to use the implied volatility moves as our new setup on the day. As long as we don't breach 33.30, we've got ourselves a trade in motion. But that is, if we took it right here, that's still an 8-point stop. So maybe use a micro if you're taking care of that. Low edge, 3,272 for the initial implied volatility move, but we have We have a market structure break at $3,280. It might stop there. And of course, the 2-day move, 3,298, or the big fat round number of 33. But I do like this short. I do like this short, very extended from the moving averages. Momentum is still high, so you want to look for a failed retest to get the best bet, and perhaps you can use your stop at 3,324. Let's take a look at SPY. Of course, monthly charts, they all look the same. SPY almost at the top of last month's high. That's 567.40. We're about $1 away from that line in the sand right now. We gapped down. First level of the implied volatility move high would be 568. The low end begins at 560. What would I be looking at? Momentum is down. They're trying to find a support structure. If they hold the low of the opening range, 562.20, right? So maybe you give yourself 20 cents of a stop. We could easily fill the gap up to $566.60. The implied volatility move, 568 for 1 day, 571 for 2 days. For the weekly, it's all the way up at 576. That's got to do, of course, with the Fed announcement this week. On the downside, 560 support, 557 secondary support off the 2-day vol move. We've got 2 gaps. Could fill in. We could fill the gap below. That would make a really nice long. If it comes into the area, let it fail and then watch it recover. Don't catch a falling knife here. Momentum is sharp. I think this entire move has been fueled by short sellers, and so I'd be very concerned about catching a falling knife here. If we hold 560 and then get back to 562, that's going to be a nice area to position long action as I see it. Taking a look at the Qs finally. Monthly chart, very nice structural move up. So where are the traders going? You know what? The buyers would love to get back to 511 and some change. Could this be a failed retest on the horizon? Potentially. Potentially. This really strong buying candle, but I do think it's been fueled by short sellers. We'll just have to see how it frames out. Now, if we take a look at the hourly formation, you can see I've marked the weekly implied volatility moves above and below for the entire week. If you're thinking about maybe selling an iron condor or, you know, buying a butterfly, I don't know. We'll talk about that on the midday Moneyball report, but the low end of the range at $483 or so, if we recover that, going to give us some long action to, you know, 485, 486. There's a gap above that goes into 488. There's a gap below that begins at 481. So we could have ourselves pretty big moves from one direction to the other. My thought is if the trend is up on both of our moving averages and momentum is down, the deep dips will end up being buy zones. Okay? And if we bounce up into a lower high, which we haven't gotten lately, right? A lot of higher highs, a lot of higher lows. If we break up and then rotate down from a lower high, we'll either be moving back into a congested range or we're going to go down and fill in all of this motion that's been tremendously wicky. All right? Take care, everyone, and I'll see you on the streams. Good luck trading today. You've got to manage risk first. Trim down on your trades, and for those of us that watched the Performance Mindset together, make sure you are tracking your trades and pick a mistake you made last week and say, okay, this week, I'm not going to make that mistake. Slow steps, one at a time, one moment at a time, one trade at a time, one day at a time. Thanks so much, everybody. See you soon.